Time now for today's three-stock lunch. On the tasting menu today, a UK regulator dropping a key hurdle to Microsoft's Activision takeover, while Netflix and Match Group are among the biggest gainers on the S&P 500 this week. Here to help us trade all three, Shelby McFadden. She's senior analyst at Motley Fool Asset Management. Shelby, welcome back. Let's start, why don't we, with Microsoft?
Sure. Microsoft's a buy for me, and that's because they're a great core, large cap, well capitalized, financially strong position. Sometimes they offer a little bit of yield if the market has come off a bit or if tech's looking oversold. And with them now sort of prevailing, getting over this hurdle with regards to Activision, that tells me that management can now go along with their initial plan to continue to expand, reinvest, to generate income, to generate cash flow and appreciation for shareholders. So anytime we see the elimination of that sort of explicit or implicit cost of changing the strategy, of hustling to try and find a new way to reinvest and expand in the business, that's going to tick up the outlook. And when you tick up the outlook, we tend to see that little bit of bump in price as well. So for those reasons, Microsoft continues to be a buy for me. All right,
the behemoth getting more behemoth-y. Shelby, what about our next one, which I believe is Netflix? This is the one that's been the big focus on that Canada report, and shares up significantly this week.
Netflix is also a buy. So, when we see that sort of third-party data coming out, it's definitely positive, feeling encouraging, right? As long as Netflix can continue to, keep their expense run rate at one that is lower than the expansion of revenue, and they're able to continue that cost leverage and scale, then driving subscribers contributes to driving profit, right? The other thing that keeps me positive on Netflix is that they just really excel at what they do. They've got strong brand advantage, sticky pricing power, and it's a cash generative business. So they are able to finance a lot of their own expansion and growth with their operations, which keeps them from having to raise substantial amounts of capital. And last is just that they're really well positioned to take advantage of what has been a really saturated competitive landscape. As peers and competitors start to sort of offload some of that content and maybe potentially stop running business, Netflix is in a great position to pick some of that up and to use that, continue to drive subscriber growth in the future. So it's a buy for me.
It's one of those stocks that feels to me like a gotta have. I mean, it's a product you gotta have, and if you're trying to build a core portfolio, there are a few stocks that you would kind of say that ought to be in there somewhere, and I think Netflix fits that bill, as does Apple and several others. Let's go now to Match Group. Where does this fit in your rubric?
Yeah, Match is going to be a hold for me. It's great to see some of the data pointing to the fact that there is looking to be a longer runway when it comes to price for them, right? More wiggle room. But it's still a wait and see. As an investor, I need a little bit more proof that the value proposition is there, that the business model is strong enough to get through a weaker environment for their subscribers. It's really important to differentiate between just the absolute price of the subscription and the value that it offers. So as we go into potentially a slowdown, times when subscription fatigue feels extra heavy on consumers, it's no longer just a question of what's the absolute price. This is a small part of my budget. It's what utility does this offer, right? So Match is a hold because I really need to see how sticky this service is and how much wallet share it can continue to take up as we go into a little bit more of uncertainty.
Yeah, well, I guess its utility could be the ultimate utility, right? I mean, you find love for life. That's pretty good utility, I suppose, for a lot of people. I liked your phrase. What was it? Subscription? What was that word? Subscription fatigue? Or?
Subscription fatigue.
Yeah, I'm enduring that right now. Honestly, I've been trying to cut away, chop through some of the subscriptions, whether they are service plans or news feeds that I used to subscribe to. I just find I need less, and over time they add up to more. Shelby,
yes.
Great to see you again.